As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We have a returning guest today, Craig Hemke, founder of TF Metals Report and a more than 20-year financial professional, is here with us again on Reluctant Preppers to give us his insight on what's going on in world financial markets and political interactions. Craig, thanks for joining us again here on Reluctant Preppers.
Hey, Dunnigan, it's always a pleasure. Nice to visit with you again.
If we could just start right off the chute with, this was a rather explosive day on the precious metals markets. We had seen a apparent inability of both gold and silver about a week ago to penetrate some moving averages that they looked like they were poised to take out, but then sort of faltered and started retracing against those. But today they reversed course and went almost straight up. If you could give us some of your insight, you had mentioned on your one of your free blogs on your main site page, talking a little bit about some of the precious metals charts today and how it was a strong day, but one day or 2 days doesn't make a trend. But can you talk to us about some of the possible political underpinnings of the dynamics that may be driving some of this action today in the markets?
Yeah, there's a lot going on, no doubt about it. And on my site, we've been talking now really almost since the election, how there's this, what we call a generally accepted narrative that's being shoved down everybody's throats by the mainstream media, by the sell side, bank analysts, everybody that's got their hands in the cookie jar trying to make money off of a rising stock market, are out there telling you that the stock market's going up, the dollar's going to get stronger under Trump, interest rates are going up. And I asked her on my side to instead be a contrarian, just because when everybody's on the same side of the boat, it usually goes the other direction. And so far, that's what we've seen. In fact, as we're wrapping up January, the dollar's down almost 4% as measured by the dollar index this month. And that's totally contrary to what everybody was expecting, back on New Year's Eve. And we're seeing a number of things play out now that are, again, different from that narrative that was forced upon us after the election. Back, I don't know, I guess it's now been last week or 2 weeks ago, the Trump administration first set its sights on Mexico, all about the border wall. But one of the other things that was bandied about one day was a potential 20% tariff, 20% border tax on Mexican goods. And, there's been a lot of talk about Mexican cars and manufacturing plants and things like that. Well, today, one of the key drivers in gold and silver here on Tuesday, the 31st, was the Trump administration turning their sights on the EC or the euro and the EU, and the chief. See if I can say this right. Trump's chief economic man or trade man, guy by the name of Peter Navarro, was out earlier today saying that the euro was undervalued and it was hurting us competitively. So the euro shot up, and that's all part of why the dollar went down. Well, this guy Navarro is a very interesting character. And when he was appointed as Trump's chief trade guy, I don't know, 4 weeks ago, 5 weeks ago, we noted on my site that this guy's famous for talking about China and the impact China has, and the Chinese trade imbalance with the U.S. and the Chinese currency, how it's pegged to the dollar and that type of thing. In fact, he's written 2 books on the subject, one called The Coming China Wars, which right then makes you wonder what his mindset is. And then he has a second book called Death by China. So if the Trump administration and this guy Navarro have already tackled Mexico and then they put the EU on notice, how long before they go after China and start talking about trade wars? I tell you, Dunnigan, that again, the notion that this year is predictable, and boy, everything's easy to see. Interest rates are going higher, the dollar's going higher and all that stuff. Man, I tell you what, we're already seeing it go the other direction here in January, and I bet it's probably going to keep going that way all year.
It's interesting when you bring up China. We've had a number of guests talk about China being in a runaway war against basically their own unemployment if you look at their demographics of their population, men being born at a much higher rate than women due to enforced one-child policies that lead people with cultural biases to sex-selective abortions, and then the idea that whenever you have unemployment, you have the potential for civil unrest, and that they will do anything to create supply and capacity for industrial production to maintain full employment, because that provides stability highly valued in Asian cultures. And the idea that when their economy is no longer robust enough to absorb that supply domestically, then they expect the rest of the world to take it on, and they'll do that at any cost. And so other Western economies and companies using traditional financial measures of return on investment, et cetera, just being decimated by this wall of supply coming out of China, first in the steel industry, then the cement and concrete industry, now in solar and other industries. Do you believe that will do you see any end in sight for that trend, or is that just kind of like setting us up for that's going to continue and life will no longer be the same to any company that tries to compete with that?
Yeah, and Dunning, to that end, the Chinese have built all of this primarily on their own backs of their own debt. And all of that is a tremendous problem for them, and they're trying to grow their way out of it. And like you said, that's getting increasingly difficult to do, and it's increasingly difficult to do when the U.S. dollar is going up and they've pegged their currency to the dollar. That means their currency is going up and making it less competitive for all of these products that you're talking about. And so, yeah, it's a real problem, and it's something that really nobody's talking about. Tomorrow, we're going to have the conclusion of the first FOMC, the Fed meeting. The headlines are going to hit at 2 o'clock in the afternoon on Wednesday, and they'll probably be full of more Fed speak from I call her Mother Felon, and the rest of her goons on the FOMC, talking about how robust things are in the U.S. and full employment and all this other nonsense that are provable falsehoods. And they'll talk about how they're going to raise rates this year, just as they've talked about raising rates every year since 2010. And that may cause the dollar to bounce back. Again, every uptick in the dollar, though, because of that currency peg, also upticks the Chinese yuan, and that is a big problem for them. And if we get into this trade war, whatever, anything forces eventually some type of currency devaluation by China, the ripples worldwide, the deflationary ripples worldwide are going to be extraordinarily difficult to predict. And again, all part of what makes this a rather interesting year.
You've mentioned on a recent podcast that you did on the Kennedy Financial, talking about signs and symbols that people can just use common sense to look around and see during this interesting year what's really going on. Since you mentioned yelling the propaganda that the Fed and the chairman often they'll talk government statistics, metrics, and so on that are making things sound better than they actually are. You mentioned on there an interesting observation about the amount of apartment buildings that are being built, and whenever I've seen that too. We used to live in the Twin Cities of Minnesota, now in a different part of the Midwest, and just seeing this building boom of rental housing, and I interpret it all along as well because of the easy money policy. It's easy to borrow, so that changes the business case to make it more favorable to borrow and to build. But you had a different twist on that, saying how it indicates the unhealth in people's financial situations. If you could fill us in on that.
Yeah, it's really, I think, a sign of the extreme indebtedness of today's college graduate, the millennial. We've seen the charts. Our entire U.S. economy is based upon debt, and in this period of the last 10 years, where the consumer has been trying to save again for the first time and pay back debt, well, the banks, the economy needed more debt to be created, and so they've saddled this next generation of consumers, the college kids, with just an incredible burden of student loan debt. You can pull up these charts and just see how it's just skyrocketed in the last 10 years. And so now you've got these young, we'll call them professionals, whatever, that are leaving college or graduate school with 6 figures of student loan debt. Well, that's the kind of debt they would have taken on in the past to buy that first house, the first, that starter home, $200,000 or $150,000 home. But when you've already got $120,000 in debt, maybe you can't even qualify for a mortgage, much less, try to service that debt. And so therefore, there's now all this new demand for apartments. Got to live someplace. If you can't afford a house, you rent an apartment instead. And I think that's, to me, what's behind. I mean, I saw it again today. I was just driving over where I live. I mean, it's just apartment complexes are going up everywhere, 4- and 5-story ones even. And you're just, wow. And again, it looks good on the surface. Hey, it's some construction jobs, but below the surface, to me, it's a sign of some serious distress in the future of the economy.
I remember working with a entrepreneur one time whose banker told him, "Don't ever confuse cash flow with cash," and it's taken years and years and decades for that to sink into me. What you're talking about there is what you talk about, things looking flush and active on the surface versus do you really have any substance behind it? And when you talked about this sort of houseless living phenomenon, made me think about just how that just is a principle that echoes kind of that emptiness in so many areas, like foodless kitchens. How many urban professionals and so on, they go out to eat all the time. They have nothing in their kitchen cupboards.
Right.
And versus the previous generations that actually grew their food. I mean, if you'll go back a half a century or so, people actually growing their own food and having it in the ground. And goldless currency, well, we've had that since 1971, right? And
right.
Paperless office, that sounds efficient, but that means the NSA, it means how many people, raise your hand, in the last year have written or typed a letter and stuck it in an envelope and sent it to someone rather than, as a correspondence, not your tax return. That doesn't count.
Yeah. Exactly.
But anything else is subject to inspection, loss of privacy, or bookless research. It's so easy, prevalent to just search anything, but then you're being, Google and Facebook and everybody are watching, and you start to see those lurking ads pop up, and what you're looking up is being tracked. And then the last one was cashless economy, and that one's just throwing me for a loop because if you could talk to us a little bit about that. I've asked our guests to recently. I can't help but think of, if you can't have your wealth, if you can't hold your money, and you have to go ask permission to move it from place to place. It just reminds me of the Oliver Twist going up and saying with his bowl, "Please, sir, may I have some more?" You can't have it. So can you talk to us a little bit about what you see going on with the cashless economy and what are the alternatives?
It's really one of the most insidious and frankly evil things that are being promoted here in 2017 and being promoted now on almost a regular basis. You can find a story somewhere in the mainstream financial press about how we need to ban cash, eliminate cash. What do we need it for? What do you need cash for? It's inconvenient. It's dirty, got germs all over it, and really the only people that use it are, nefarious reasons like bookies and drug dealers and people like that. And there's a couple reasons for that, and a couple reasons why I think that it's evil. The one primary reason why they're trying to condition everybody to accept this idea of a cashless society is so that banks can begin to charge you on your money. The traditional relationship is a positive interest rate where you park money in the bank and the bank pays you 2%, 3%, 5%, whatever, for the privilege of holding your money for you. And then they loan it out at a higher rate and collect the spread. And I guess you'd say everybody's a winner, though. That's maybe a topic for another day. But nonetheless, that's the way it's always worked in the past. Well, now we're moving to this regime of negative interest rates around the world. And what that is basically let's call it, instead of a bailout for the banks, a bail-in. Because negative interest rates, you pay the bank for the privilege of cashing your paycheck and holding it for them. So not only is your currency being devalued, your savings being devalued by the creation of new dollars. Say that you pay the bank a 1% fee for a savings account. And of course, that's not anything anybody wants to do. And so your next logical step would be to say, well, to heck with that. I'll just have the cash then, please. Well, no, we can't. No, that's why we're banning cash. Oh, we won't ban all cash. We'll just ban the $100 bill. But if you ban the $100 bill, you remove about 60% of the currency in circulation. And again, if you want to go get $10,000 out of your bank, I mean, that's a $100 bills, but it's 520s. Try putting 520s in your pocket and storing them safely. I mean, anyway, so they're doing all this for that reason, first and foremost, so that they can, these banks can collect fees from you, would not give you any choice but to pay them. The other part of it, though, is even more insidious, and that's the threat to personal liberty and freedom. If your wealth, if your bank account, if your net worth is nothing but a series of ones and zeros with no real way to prove that it's anything else, that is subject to be taken away from you in a keystroke. Whether you are a threat to the authoritarian, tyrannical rule of your government, wherever you are in the world, whether you're just a perceived threat, whether they charge you with a crime that you didn't commit regardless, and they just garnish your entire net worth through a keystroke, as long as if everything's digital. There are reasons why sound money principles were written into the Constitution. The framers and founders of this country knew these risks, and that's why they said only gold and silver can be money. And we've certainly come a long way from that, haven't we, Dunnigan?
Well, yeah, if you could just weigh in on two aspects of that. One is how have we gotten away with that? How have they gotten away with that? If that's actually in the Constitution, how is it persisting? And secondly, if the U.S. dollar used to be backed by gold even after the formation of the Fed in 1913, how is it that if you look at a chart of the U.S. dollar, the value just being eroded away through Fed dilution of the money supply, it didn't just start in 1971 after Nixon got us off the gold standard. It was going along the whole time. So could you take those two? First of all, how the heck is the government and the Fed and the powers that be getting away with having us not be on gold and silver?
Well, this was a big argument. Anybody that's seen Hamilton, if you can afford it, has seen this argument play out on the theatrical stage. This is a big argument all the way back right after the signing of and the writing of the Constitution, was whether there would be some type of national bank printing a national currency, and Hamilton was a big proponent of that. There are ways around it. Obviously, in the Nixon order in 1971 was simply an executive order, like we've seen all presidents utilize all the way up to today. And basically closing, at least canceling on a temporary basis, though it's been permanent, the convertibility of a dollar into gold. And you talk about the growth of the money supply and the devaluation of the dollar. It was just pretty steady and slow, almost predictable, just a nice gradual slope from 1913 to 1971, but it's exploded since. And most of the degradation of the welfare of the middle income people in the U.S., the vast majority of working, saving, God-fearing, law-abiding people, the degradation of their standard of living has come since 1971. And Dunnigan, you and I are about the same age. I mean, probably the same way I look at it. For what I make and the income I have is nowhere near the standard of living that my parents had 40 years ago when I was a kid, for far less income, and taxes have eaten into it and that kind of thing, obviously, too. But it's that devaluation of the currency, the limitless fiat creation between what I call this financial political complex that has, again, decimated the middle class. It's the source of income inequality in the U.S. It's a source of net worth or financial inequality in the U.S. The politicians all want to blame each other, and that's all part of the game. Instead, it's this financial media or financial political complex where the politicians demand money from the bankers through the Treasury so that they can buy votes and fight their wars and fund their social contracts. And then the bankers gleefully print it and supply it to them because the more money that's created from thin air gives them more money to charge interest on. And until that system ever changes, until we get back to the original idea of sound money, and money can only be created with some type of sound backing to it, nothing's going to get any better, unfortunately.
That turns us to my last question, which is about what your view is of the true physical demand and supply of gold and silver worldwide. We've heard lots of different opinions about how you can obtain gold and silver in small quantities, but it's not available in large quantities, or how the demand is shifting from the Western Hemisphere to the Eastern Hemisphere, or how central banks are accumulating, or central banks have basically emptied themselves out in the West. Can you give us your view of the true physical supply and demand dynamics as you see for 2017? What's really going on with physical gold and silver?
In a nutshell, Dunnigan, it just doesn't matter, frankly. It won't matter until it does. And what I mean by that is that we've got this pricing scheme that has been foisted upon us since January 1, 1975, when gold futures, gold derivative futures contracts first begun trading on the COMEX in New York. And we began to price gold off of this derivative trading and the value of the derivative contract rather than it changing hands physical itself. It's the futures market wags what we call the spot dog, if you will. It's the tail wagging the dog, where the futures are the tail. The job of the big bank, what we call bullion banks that operate in New York and London, is to supply metal, to flow metal into the physical market at this falsely, artificially generated paper price. They will continue to do so. They will continue to lever and what we call hypothecate the existing supply as many times as they have to try to keep the system going. And they will keep the system going until it finally breaks, until the fundamentals finally do assert themselves. When that happens is impossible to say. Eventually it will, because the system is at its end. It's a confidence game. If you think you own gold, if you have a paper certificate or an online account or something that says you own gold, you don't own gold. You have a promise that maybe you do, but the gold that you think you own probably has at least 100 beneficial owners of that same ounce. Well, as long as no more than a couple of owners show up at once looking for their gold, the confidence scheme continues. But when all of a sudden the confidence is ruptured and 50 owners show up at once, that's when the whole thing snaps, and that's when all of a sudden the fundamentals suddenly come back into play. That's why I said it won't matter until it matters. How much gold there really is in the world that's on clear title and clear provenance, we have no idea. We really don't. And that's why I think it's a fool's errand to try to compute, well, I think the right price of gold is $8,000 an ounce because I have computed the money supply and the whatever. Knock yourself out. I think that's just a fool's errand because we don't know how much gold there really is. It is priced as if it is abundant and readily available, when what's available is just this kind of daily flow that you see. Some of it shows up at your local coin supply store. But what's really only readily available are these derivative contracts that the banks print from nothing and feed into the traders on the COMEX exchange and in London. And until the system changes, we won't find out how much gold there really is, physical gold there actually is for sale, and at what price someone's really willing to exchange it for dollars or euro or whatever. So far this year, though, that price has performed well. It's kind of gone without noticing, actually, that gold where are all these death knells? All the perma bears and the snake oil salesmen were out there in December talking about gold going to $300 and all this nonsense. So far in 2017, as we wrap up here in January, gold's up $60 year to date. So that's about 5%. And silver's up almost 10% in a month. And no one's really talking about that. So it should be, I think we're setting up for a good year. If I'm right about this idea where everybody's on the same side of the trade with a higher dollar and higher interest rates, and if instead things go the other way, then demand for the gold derivative contracts is going to increase, and that price that you see quoted on Bloomberg and CNBC is going to go up. But in the meantime, I'm saving for the day when it all breaks, when the confidence scheme fails, because it's not going to be $1,200 an ounce then. It's not going to be $2,200 an ounce then. It's going to be something multiples higher. And gold will have done its job in that it will have protected my savings, my hard work, my accumulated net worth, and then we'll take it from there. But in the meantime, Yeah, you're right. Things are looking up, and so far so good in 2017.
When people want to find out more of your work, Craig, what are their options?
Well, the site now has been around for about 6.5 years, which I don't, Dunnigan, did you see like pictures of Barack Obama from when he took office to when he left?
Black hair, white hair.
Yeah. Or like George W. Bush was even worse, right? I mean, he went from like a relatively spry looking young man to like looking like his dad by the time he left.
Yeah.
That's about what's happened to me in the last 6.5 years too, unfortunately. But we have been around for 6.5 years. I do some stuff there on a daily basis, advising on which way I think price is going. I guess maybe advising isn't the right word. We're putting out there where I think it's going. People can do with it what they want. But the site is where the real value is. It's populated with a couple thousand really smart people that see things pretty much the same way. And we're all kind of in the same boat together, kind of preparing for the moment when all of this does come to an end. And so I think if people check out tfmetallsreport.com, they're going to find the most value probably coming from the community aspect of it all. And everybody, all looking out for each other, preparing for this eventuality. To subscribe and read what I do, it's not like it's a deal breaker. It's only $12 a month, but the site otherwise though is free, and I encourage people to check it out because it's, like I said, it's a tremendous online community.
Well, Craig, we're always glad when you join us here on Reluctant Preppers, and just thank you for coming by. We'd love to have you back again on soon.
Should be an interesting year to keep track of, Dunnigan. So just call anytime. I'll be happy to
we will
visit with
stay
you
in
again.
touch. Thank you so much.
All right, my friend. Thanks.
Alrighty. Take care.